In this video, I'm going to show you how my 8-stock portfolio is on track to hit $100,000 faster than my old portfolio that had over 30 stocks and over $3,000 more in value. About a month ago, I did what I consider the unthinkable. I sold over $4,000 of my portfolio. Honestly, it was really hard to put emotion aside for a bit because within hours, over 80% of a portfolio that took me over 7 years to build was just suddenly gone. Hearing this, most of you guys would consider it a setback, which is understandable, but I'm going to prove to you why this is just a launch pad for my biggest comeback yet. We're breaking down the math of velocity versus volume, and by the end of this, it should have you looking at your $30 per week budget a little differently. So while my balance dropped, my efficiency skyrocketed. Why? Because I stopped diversifying. Corny, I know, but look, diversifying your portfolio or having a diversified portfolio is some very solid advice, especially when you're new to investing. But when you have only $30 per week to invest and you're investing in over 30 different positions, that means you're investing less than $1 into every position you have every week. And when one of those positions skyrockets, then the impact it has on your entire portfolio is pretty small. By consolidating into these 8 high conviction positions, I'm ensuring that every dollar I put into the portfolio is working overtime. I'm not just buying stocks anymore. I am fueling specific engines. And speaking of engines, this comeback is part of my 2-engine rule. Every stock in my portfolio has to have 2 different things. One, it has to have a long-term history of share price growth, engine 1, and it also has to have a long-term history of dividend growth, engine 2. With that, the 10-year average of my 8-stock portfolio is 28% per year when it comes to share price growth and over 14% per year when it comes to dividend growth. Now, before the big reset, my collection of stocks had an average of 9% in annual share price growth and would hit $100,000 by December 2038. Not too bad, but my new 8-stock portfolio, even starting at $3,000 less in overall balance, it would hit $100,000 by January of 2037. I literally bought back 2 years of my life by having less money today. That is for sure the power of quality over quantity. But let's get practical. How exactly do you manage 8 stocks on a $30 per week budget? It's not just $3.75 into each position every week. I use more of a weighted strategy, meaning I put my $30 every single week into one sole position. For example, I tend to put more of my funds into my aggressors like Broadcom or my iShares semiconductor ETF. Speaking of which, those 2 positions have a 5-year average share price growth of over 44%, while my other positions like SCHD with their collection of primarily consumer defensive and healthcare positions help offset that volatility. And that way, even on a small budget, I'm still maximizing on my yield on cost. This isn't about just picking stocks, it's about allocating your funds so that they grow 10 times faster than putting your money in just a regular index fund. Now let's talk about the long game, the long-term goal, which I'll call a specific moment the drip tipping point. The drip tipping point is the moment where your dividend out-earn your weekly investments. At $30 a week for me, that point is 22 years from now. Now, subjectively, that's a while. And your first thought might be, okay, well, I can cut that time down if I just increase my investments every single week. And here's the crazy part. If you were to increase your investments to $40 a week or even $50 a week, it actually increases the amount of time it takes to get to that goal. And the reason being is because the more you increase your weekly investments, the more you increase that annual dividend payout, which means you have a higher goal to get to. But before you freak out, look at the differences in these results. Even if the time to the tipping point stays the same, the wealth gap difference between my old 30+ stock portfolio and my new 8-stock portfolio is massive. By the time I hit that tipping point with my new strategy, not only am I hitting a specific goal, but I'm putting my portfolio in a position where it's valued dramatically more than my old portfolio would have been. Whether you're investing $20, $30, $40, or $50 a week, you're not racing to a date, you're trying to get to a number. And this 8-stock engine ensures that whenever I get to that number, then the prize is at least twice as big. So the math proves it. An 8-stock portfolio is much better than a 30+ stock portfolio when investing a low budget like $30 a week. But which 8 stocks did I actually keep, and why did they survive over the other 22 stocks that I just sold to the wayside? I broke down that entire list, the ticker symbols, the yields and other metrics, and the math behind the 2 engines of each position in this video right here. If you want to see the specific engines that power my portfolio to $100,000 potentially 2 years sooner, Make sure you click here, and I'll see you there.